Good afternoon or evening. Greetings to everyone. Wanted to make a quick midweek update, intra-week update or midweek update on what the market has done so far and what I'm expecting the remainder of the week. Let's start off with the dollar index. With the weekly chart on the screen, I explained last week that we have confidently or properly closed above this weekly inversion fair value gap. It was once a bearish fair value gap or a CB, a sell side imbalance. By the time we closed here on this week, the next candle bouncing off of it indicated possible bullish prices from there, and we tested it one more time and now pushing higher. I also noted how I had this swing highs here on a lower time frame as a buy side liquidity or as my target, and the midsection of this massive imbalance from the weekly chart, which also had an internal buy side liquidity over there. So we actually cleared both of those targets in a day without actually trading down to this other block. Because if you remember the previous video, which I will link in the description if you haven't watched it yet, I was looking to see, well, the chart actually looks like this. I was looking to see if this other block could support higher prices, and I specifically mentioned that it does not have to trade back this deep into the other block before going higher. I didn't want this deep of a retracement because I expected this range to be a balanced price range. I expected us to not need to come back into this consolidation. So that's why I wanted to see a quick tap and go. But the market opened and you can see we literally opened and started trading higher. There was no manipulation to the downside. There was nothing done before we started pushing higher, and we cleared both of those targets within the same day. Now Tuesday's candle is printed and Wednesday's candle is completing right now, and so disregarding this for a moment, don't need this alert anymore. Disregarding the order block and my previous entry for a moment, we can see here where I labeled it as the volume imbalance, which will be more visible on a lower time frame, but we'll get there. But on this daily chart, we can clearly see a fair value gap that was created between Friday's candle and Tuesday's candle. In between Monday's candle, we have this inefficiency residing here in the form of a buy side imbalance, right? Right now, the daily candle is still going to only close in 3 hours and 21 minutes. Looking at this countdown here. So there's still a little bit of time left for this candle to close. But I would like to see us close within or above this BC, this imbalance. I would like to see us close within or above this buy side imbalance. Ideally, because I'm still looking for higher prices and I don't believe that we are going to be retracing lower from here, even though this is a weekly imbalance and we can reject from the consequent encroachment and see lower prices. Very likely to see this sell side tagged if that's the case, but I already mentioned in my previous video that I'm not looking for that possibility. I'm looking for a possible market maker buy model forming to clear these highs above here at the 107.1 level, area. So I'm looking for something like this to make this an inversion, this weekly sell side imbalance to now be made an inversion before we can see an expansion to the upside. So I want to see a complete closure above this weekly CB, this weekly fair value gap. If we can get that, then next week we can use it as support for higher prices. This is what I would like to see. Of course, I don't know the future and anything is possible. If we do trade below and close below this swing low from Friday's low, then it is likely that we're going to go for this sell side liquidity. And if that happens, then I will look for a retracement. So I mean something like this, a closure below the swing low. I'll look for a retracement of some sort into an inefficiency or an order block or breaker to trade it to the sell side. And then we might only then look for possible push to the upside from there after clearing this sell side. But this is not, again, I've mentioned already that this is not the probability or the possible scenario that I would like to see play out. Going down to the 4-hour chart, actually even the 1-hour chart, we can easily see this volume imbalance, right? This is the new week opening gap. This was the gap that was made between Friday's closing price and Sunday's opening price. There is typically a gap that's created between those 2 days or those 2 times in most asset classes, and that gap is critical for the rest of the week. So right now, I'm expecting this gap to be the one to support higher prices from here. And I don't like the fact that it's been meandering around here. It's been consolidating after this massive fall off. I don't like the consolidation. I would have loved to see a quick expansion immediately after testing the new week opening gap or the volume imbalance, and then a retracement to continue higher. This is what I would have liked to see, but we can see that it's been chopping around a lot, especially considering that this is an hourly chart. So each candle here represents an hour, and we can see that from yesterday 2 a.m. during London session, we've basically stayed in this range. Haven't really done anything. But pairing this with a currency pair that if I wanted to trade a dollar, I would have traded it with USDJPY, just out of personal preference, and personally I see it as the one with a little more directional, higher time frame directional bias. So starting with the weekly chart, it may not be clear to many people, but to me it seems clear enough that we are targeting the all-time high. The all-time high is this level. We attempted clearing it there, and even though it looks like it, we actually did not clear the all-time high, and we can easily see the gap between the all-time high and attempted raid last year of November, within the month of November. So now on the weekly chart, we had a doji candle or a small range week. We essentially closed where we opened in the week, and in the process creating a tiny fair value gap there. So the previous week opened, we also had a small body candle, but we traded lower into this inefficiency. I believe is on a daily time frame. We traded lower into this inefficiency and rejected aggressively on Friday. So when price closed above this swing high, this specific swing high right here, we can see that the candle closed above it on this day, which was Monday. When price closed above it, I started paying attention to the inefficiencies below, which is obviously this massive gap made from Friday. Let me delete this because I don't like too many things on my chart. There's already a lot. So I saw this inefficiency. I decided to measure it so I can get the halfway point, and we can see that's where my alert was, the yellow line. We can see the consequent encroachment of this massive inefficiency, which is this blue line, is right there. And today we just tapped it, right? We just rejected off of it. So what I'm expecting from here is more bullish prices. I'm expecting firstly for these relative equal highs made on these days last year November to be raided first, and from there we can see a possible raid for gunning for the all-time high. So I'm bullish on the dollar, therefore I'm bullish on USDJPY. And going down to the 4-hour chart, we can see that I narrowed down the consequent encroachment into this massive 4-hour fair value gap, which was why I set my alert there. So we have this 4-hour fair value gap with swept liquidity. which again will be more visible on a lower time frame. Let's go down to, say, the 15 minutes chart, and we can delete this as well because we don't need the alert anymore. On a 15 minutes chart, this was the low of the day. Technically it's on Tuesday, but this was during the Asia session, and then this happened during the London session. An attempted raid in liquidity, but failure to do so, because I looked at the DXY, the dollar index, and the dollar index raided it. So I was expecting this to be an SMT divergence for us to keep pushing up, this to be an SMT divergence, but that did not hold, of course, because we can see here at the market opening we just fell off. But this was fine with me because I like the fact that we fell off and rejected immediately. We did not waste time at that sell side liquidity. So we can either, let's just call this a sweep. So essentially what we got was a raid in liquidity. We got a sweep in liquidity, or yeah, sell side was swept and immediately rejected back into the range, coming back to this inefficiency, and on the 30 minutes creating other blocks. Every bearish candle was now supporting higher prices, bearish candles supporting higher prices. And even though it's choppy now, which sort of makes sense because this is essentially the dead zone, the New York PM session, where the dollar doesn't really move much and the currency pairs as a whole have now closed off for the day. So going into Asia session, which is going to start soon in about an hour or two, I would personally like to see this 1 hour fair value gap, which is the next alert you see. I believe it's visible, but from this candlestick's low to this candlestick's high, we can see there's an area where no other candle has laid over it. We rejected off of it right here to fall off and do the liquidity sweep. But right now I'm expecting or wanting to see a closure above this fair value gap. So I'd like to see a 1 hour candlestick close, print and close like so, above the fair value gap or above this line, which is the 148.399 level. So if we can get this going into tomorrow, if we can get a closure going into tomorrow above the 1 hour fair value gap, I would look to see if it can support higher prices, creating the low of day within the 1 hour fair value gap. So I'd like to see a structure like this, firstly clearing these highs, but of course I've already mentioned that I'm looking for the 149, basically 150 level, and going through that we'll look for the 152 level. But this is what I'm expecting going into the New York, going into the Asia session. On the side of the indices, actually before the indices, I'm also paying attention to the Australian dollar with the yen. I know it's a messy price action right now, and I am paying attention to the weekly sell side imbalance, but I'm looking for higher prices here purely from interest rate differentials. I'm not going to expand on that too much in this video, but I've already covered it in my previous ones, and you can literally just look up interest rates for the Australian dollar and the Japanese yen. You notice that the Aussie is bullish. The same concept. We got a liquidity sweep at the lows. We displaced back into the range, and personally I was looking to see if this 4 hour fair value gap can support higher prices. Right there, I saw that we came off of this big one, and I wanted to see if this small one can just push us to the upside. Of course, it's been very high resistance, but I'm expecting when it runs, it's going to be very low resistant liquidity run, even if it's not this week. So I do not want to see price trade lower than this swing low right here at 5 p.m. from the 5th of Feb 2024. I don't want to see us trade low below that low. That's my invalidation point, at least for the meantime. But I'm still bullish ultimately or longer term on this pair. Lastly, on the indices, NASDAQ, I was looking to see if we can reach 18,000. Firstly, we've already gotten to our first target there at 17,793.5. We smashed through that today, and I was looking to see if we can see 18,000. So probably sometime next week, I will be looking for a possible opportunity to sell the indices longer term. It's either next week or starting from this Friday of this week as a sort of a TGIF setup, but this is what I'm looking for going into next week. For now, I'm still bullish on the indices. Nothing is bearish about this market, so I'm going to respect that. That's all I have for now. I don't have any much updates on the currency pairs. Everything that I've outlined in the previous video is still unfolding very slowly. I don't see much else to say or to cover, so I will link the previous video in this one's description if you need to catch up on anything. But this was just a very quick intra-week update on what has been happening so far. So stay safe, good luck, and good trading.